Well, hello everyone, and welcome to your Daily 5. I'm Joe Duarte from Joe Duarte and themoneyoptions.com, author of the best-selling Options Trading for Dummies and the Everything Investing in Your 20s and 30s books. If you like what you see here, please consider a free trial to my website, Joe Duarte and themoneyoptions.com. And as I'll tell you about later, you can also check me out on my Buy Me a Coffee page. But today I want to talk about my analysis routine and how to make money by following the actions of the smart money. All right, so our goal is to follow the smart money. And the first step is to identify the market's trends. Second step, identify the strong sectors. And the third step, detailing where money is flowing in and out. So the first thing we want to do is look at the big picture. And of course, that has to do with where interest rates are and whether the prevailing market trend for stocks is up or down. So the first thing we want to look at is the trend of the U.S. 10-year Treasury bond yield. Of course, this is the biggest and baddest bond market in the world because it sets mortgage rates. And of course, mortgages are, and the housing market is about 15% of the U.S. economy. Of course, it's also an inflation gauge. When inflation news is not good, bond yields rise. And what we've seen lately is that the consumer price index and the producer price index seem to have bottomed out, and after a pretty good decline over the last year. And that means that bond yields are starting to rise. You can see here the 4% yield is now support versus resistance, as we saw earlier. So that's a little bit of a negative in the current market. Next thing we want to look at, of course, is the trend for stocks. And people that are familiar with what I do know that I focus on the advanced decline line for the New York Stock Exchange. That's because Amazon and Netflix and Microsoft can't distort this line. So while you can see indices that get distorted by these heavily weighted stocks, the advanced decline line is not distorted. Therefore, the trend picture is a lot clearer. So what we're looking at in the advanced decline line currently is that it seems to have topped out in the middle of July and it's starting to trend lower. You can see it's broken below its 20-day moving average. So the trend is a little bit iffy right now for stocks. Moreover, if you look at the CBOE volatility index, which is our second trend indicator, you can see that it's starting to rise. That means that there's a lot of bearish sentiment that is creeping into the market, and that's because people are buying puts. And when people buy puts, the market makers have to hedge by selling stock index futures, and guess what? That makes stocks go down. Now, the SOFR, which is an overnight lending rate, which has replaced the euro dollars, is a good gauge for interest rates in the short term, and somewhat softer gauge than the euro dollars for liquidity. Nevertheless, what we have here is a decent picture of what's going on. You can see that as long as SOFR stays flat, stocks can rise, okay? You can see here that every time it goes up as the Fed raises rates, you can see a dip, but then when things calm down and it starts moving sideways, you can get rallies in stocks. So where are we with liquidity right now? Well, right now, the market is still suffering a little bit from that recent rate hike and the possibility of more rate hikes. Finally, we want to look at RSI, which is my favorite indicator for overbought and oversold status in the market. And what you see here is that every time RSI gets above 70, you can see that the advanced decline line starts to drop. When it gets to 30, you can see it start to rise. Right now, it's about 50, and that means that it can go anywhere depending on how things work out. So far what we have is that bond yields are rising, not very good. The stock market's starting to get soft, not very good. So if you were to look at the trend right now, the trend is not very encouraging. Next thing we want to look at is what I call the big four indicators, which is accumulation, distribution. And as I'll show you in a little bit here, that's a great way to tell whether short sellers are active or not. Then there's on-balance volume, which tells us whether buyers or sellers are in control. And volume by price, this is probably my favorite indicator because it tells us where key support and resistance levels are in the market. If you put these three together, you have an excellent picture as to whether money is moving in or out of stocks. and where the decision points are. So those are the big three. And of course, the fourth one, as I showed you on the past slide, is RSI, overbought or oversold. Now, what I also do is I use these things in conjunction with the traditional indicators, the 20, 50, and 200-day moving average, and of course, the Bollinger Bands. And as I go through the rest of the slides, I'll show you how that all comes together. Most important thing is to remember that these are the footprints of the smart money. And so what these indicators tell us is whether money is moving in or out of the market. So let's look at the market. Remember, the S&P 500 can be distorted by big stocks, but nevertheless, it's important to keep an eye on it. And so let's, excuse me, let's look at this thing real quick here. As with the advanced decline line, what we just saw is that the S&P 500 is below its 20-day moving average. That's a short-term negative. But before that happened, what we saw was that accumulation distribution rolled over. So somewhere up here, the short sellers started to come into the market. And you can see that point right here where you had this huge intraday candlestick reversal. Okay, so at this point, short sellers are active in the market. Unbalanced volume, a little bit iffier. You can see that there was some panic selling here, and there might be an attempt of buying here, but at this point, the buyers are not in control. And yes, the RSI coincided with an overbought reading way back here when the short sellers came in. Now it's below 50. So the market, as far as the S&P 500 goes, is starting to weaken. Again, what we want to look at here is what the smart money is doing. So the short sellers started covering way back here. The market started going up. The buyers started coming in a little bit later and continued the rally. Now the short sellers are back and the buyers are starting to pull in their horns. The market is starting to roll over. Let's look at the Nasdaq Composite Index or the Nasdaq 100 Index. And that's the one that is really distorted by the so-called Magnificent Seven stocks, such as Microsoft and Netflix and Google and all those things. And again, let's look at this in detail here. Again, accumulation distribution, short sellers covering, big rally. Unbalanced volume, buyers joined the short sellers down here, big rally. Guess what? The buyers started pulling back here. You can see a double top in unbalanced volume, okay? And you can see that the short sellers continued to cover and they kept their rally going, but guess what? They're back, market has rolled over, and not only has NDX broken below the 20-day, but it's also broken the 50-day moving average, and it's below 50 here, which means that it's heading to an oversold reading. Now, let's look at volume by price. What you see here is that there's a big cluster of volume by price bars here. That's a lot of buyers, a lot of sellers, and especially algorithmic traders. These are exceptionally reliable footprints for where these guys are and what they're looking for, because they see the money flow coming in before we do. So when they're buying, like they did here when the market broke above this big cluster of volume by price bars, we should be buying too. But they were telling us earlier, here when the short sellers started covering and when the buyers started coming in, that this rally was coming. What they're telling us now is that the market is being taken over by short sellers and sellers. And if you look here, there's a pretty good sized volume by price bar up here around 15,000, and market just broke below that. There's not a whole lot of support here. You can see these bars are much smaller than the ones here. So there's not a whole lot of support. So we might see this market come down this far. Again, volume by price, accumulation distribution, unbalanced volume, that's the footprints of the smart money. So how do I look at all this stuff? How do I make these decisions? Well, number three, we look at the strong and weak sectors by CandleGlance analysis. If you don't use CandleGlance, I highly recommend that you start doing so, because in one page, and StockCharts.com, you get to see a broad picture of what everything is doing at the same time. And here's a quick glance. We can see here the S&P 500 is heading down. You can see the volatility index. You can see that there are different sectors here. And specifically, if you look at technology up here, the XLK ETF, it's weak, but you can see that the energy sector, the ETF XLE, is moving up. So I start with the big market picture, and then I work down to CandleGlance. And CandleGlance helps me pick what's strong and what's weak. So let's look at a strong sector. We just looked at the XLE index in my CandleGlance. Well, OIH, or the Van Eck Oil Services ETF, same sort of stocks. Instead of ExxonMobil, this one focuses on Halliburton and Schlumberger, but nevertheless, oil energy related. Again, let's look at all these indicators. Huge cluster of volume by price bars over here. And the market is now trading above that. That's very bullish, because even though we might get a consolidation here, as long as it holds up above these bars, that tells you that money is coming in. And what's the market telling you? Accumulation, distribution, short sellers are getting out, unbalanced volume coming in, a little overbought, but certainly you can see that there's a really good consolidation pattern here. And guess what? These Bollinger Bands are starting to shrink. Therefore, you know that a big move of some sort is coming. Now, weak sector, again, technology. Look at the semiconductor ETF, SMH, below its 50-day moving average, breaking below these fairly weak-looking volume by price bars. Accumulation distribution is starting to flatten out. But here's the big one here. Unbalanced volume is clearly hitting lower. People are selling. And when the selling picks up, you're going to expect to see the short sellers move in. So how far can this go? Well, probably down here to the 130 area, which is close to the 200-day moving average. Again, the smart money is selling semiconductor stocks. Key support levels have been violated up here, and there isn't a whole lot left of buyers and sellers here, which means that this is a very weak price area. Smart money is telling you avoid semiconductors. So let's talk about what I call stealth sectors. These are areas of the market which are likely to perk up later in the future. And what this does is it lets you build positions ahead of the crowd. And that's an important way of making money. That's what the smart money does. They're not in a hurry. So you look for those out of favor news. You look for positive money flows at the same time. You want to make sure the bottom and prices hold. You want to make sure that ADI turns up and that OBV follows. And my favorite stealth sector of the moment, what I call the next big thing, is uranium. Nuclear power is gaining favor again. It may take a while, but let me tell you, this is a very bullish looking chart if you're able to project it forward. I do own shares in URA, and it's part of my long-term portfolio, Joe Duarte, and the moneyoptions.com. So let's review this. Let's look at why this thing is a stealth sector. Look at these volume by price bars. This is buyers and selling and sellers here. There's a lot of people that are moving money in and out of the uranium stocks. But slowly, it looks like the buyers, on balance volume is rising, are starting to overtake the sellers. And the short sellers are moving out. So what that tells me is that at some point, when URA and the rest of the uranium stocks can take out this resistance level somewhere around $23 or $24, we might be off to the races. So keep an eye on uranium and look for this pattern. Lots of volume by price bars, lots of trading range volatility, but as it starts closing in on the top of the range, look for that breakout. And again, accumulation distribution is rising, short sellers are bailing out. On balance volume is also rising. That tells you buyers are coming in. So let's put it all together. First, you look at the big picture. Bonds, if you look at the current market, the bonds are telling you to be careful. Stocks are following bonds. They usually go together. When bond yields rise, stocks are usually unhappy and they start selling off. Look at the big picture in the sense of which sectors are working or not. Set up a good CandleGlance sector screen for yourself so you can look at the whole market or the areas of the market you're interested in at the same time. You can see what's going up or going down simultaneously. Focus on these indicators, accumulation, distribution, because that tells you what the short sellers are doing. Unbalanced volume, because that tells you what the buyers are doing. This is the smart money. Volume by price, that tells you where the important support and resistance is. And if you see the combination of ADI, OBV, and volume by price simultaneously, you can get a picture as to how strong an advance or a decline is. Of course, RSI tells you what's overbought and oversold. So the bottom line is that you can be the smart money by following the smart money. And I've just shown you the clues that the smart money leaves so that you can follow. That's all I have for today. I'm Joe Duarte from Joe Duarte and the MoneyOptions.com, author of the best-selling Options Trading for Dummies book. If you like what you see here, please consider a free trial to my website, Joe Duarte and the MoneyOptions.com. And I really appreciate the growth, all the people that have come over to buy me a coffee page. This is an area where I go beyond what I do on my website. I explain things more fully. I focus on specific charts every week, and I have a weekly real estate update because I'm very bullish on real estate, housing, and REITs over the long term. I also have special reports and in-depth analysis on other topics there. And there's all kinds of new stuff going on there all the time. As always, remember, trading is uncertain. Be prepared.